Hi, Dan. Thanks for joining us. It's sooner than you think.
Thank you for having me.
So you've been at PayPal for 5 years, CEO for 4 since the spin out from eBay. But I want to go back farther than that. We just had the 20th anniversary of PayPal's founding.
Yep.
And when Peter Thiel and Max Levchin started the company, there was a convenience aspect, right? They wanted to make it easier for people to buy and sell things online. But there was also a little bit of a missionary zeal, right? I remember Peter Thiel saying that he wanted to sort of give people relief from currency fluctuations due to inflation and government control. And I wanted to start out by asking you, how much of PayPal's mission has changed over the last 20 years?
Well, I would say pretty substantially, because tech in general has changed so much over the last 20 years. But I would say maybe the core of that is intact. Our mission today is to try and democratize the management and movement of money, which is a fancy way of saying that managing and moving money should be a right for all citizens, not a privilege for the affluent. And in the financial services industry in general, unfortunately, the saying "it's expensive to be poor" is quite true. A lot of the things that we take for granted, like writing a check, cashing a check, getting credit, sending money to somebody you love, is extraordinarily time-consuming. You wait in lines for half an hour, and very expensive. It can cost 10% of your disposable income, which is very hard-earned and very, very precious, to just change from one currency to another. In the U.S. alone, last year, those who were underserved spent about $140 billion on what I think are predominantly unnecessary fees and interest rates. And so I think that philosophy, that mission, that vision that some of the early founders of PayPal had still resonates and maybe is magnified inside PayPal today, more so than ever, as we've expanded our platform to really help not just consumers, but small businesses compete in a world which is increasingly, unfortunately, dominated by digital giants. And what we are really trying to do is push power out to the edges by providing a platform to allow.
Well, I want to get to how specifically you're doing that, but I pulled some numbers from the World Bank website. Maybe we can show it here, that 69% of adults now have an account at a bank or a mobile money provider, and that's up pretty dramatically, 62% since 2014, 51% since 2011. It also suggests, though, that there's a long way to go. Where are the gaps? Obviously, developing countries, but you still find unbanked here in Europe and in the United States.
Oh, yeah. I mean, I think, the stats are, 1.7 billion people are outside of the financial system today. But, if you go to either the UK or the US, in the US, something like 61% of all families would have a difficult time raising $400 in case of an emergency. Something like 75% of all families have trouble making ends meet at the end of the month, and 26% of all Americans worry about money constantly. So just because you have, a mobile phone and you have access to an app doesn't really create financial health. What we really need to think about is, how do we extend services and capabilities to those who most need it in a way that is affordable, convenient, and easily understandable. And I think we obviously have a long way to go in that. But I do think that technology makes this a solvable problem. The thing that excites me the most about this is that, there are a lot of intractable issues and problems that I'm not sure I can figure out exactly how to solve. But financial inclusion or financial health, it does have potentially its roots for a solution in technology. And I'm really encouraged by some of the things that I'm seeing right now. You should be able to do things today that you might do in a physical world, in a digital world, for 80% less cost. And imagine if we could take that 140 billion I talked about before, and even cut that in half and return $70 billion to those who most need it. It'd be pretty impactful.
Well, let's talk about what specifically you guys are doing, because there are probably a lot of people in this room who still think of PayPal simply as the button on the e-commerce website to easily make a payment, the thing that pops up on the airplane wireless so you don't have to pull out your credit card. Right. I know it's an outdated way of thinking of the company and you have a lot of different services, but what are you doing specifically to help the financially underserved?
So we are very different than we were even 5 years ago. We have now basically a suite of services on a platform that are designed either for consumers or for small businesses and medium-sized businesses to be able to participate in the digital economy. I'll give you one example that I think is particularly striking in what we're doing in helping small businesses, because small businesses are the lifeblood of communities and neighborhoods. They employ most of the people. They are a source of income and financial health for those in these communities. And so one of the things that we started to do was to extend working capital loans to small businesses. And the exact same thing is true both in the UK and the US, but let me give the US example. We've now provided $10 billion of working capital to small businesses in the last several years. We're doing over $1 billion a quarter right now. We're probably the third largest provider of working capital to small businesses in the US today, and a very large provider of working capital in the UK. Over 25% of our loans or working capital that we provide for small businesses are in the 3% of counties where 10 or more banks have closed branches. And banks typically close branches in neighborhoods where the median income is below the national average. And the reason for that is they need X amount of deposits to actually have a profitable branch. So it makes sense economically that they would do that. And we're able to basically loan to these small businesses without ever looking at a FICO score, just looking at their history, looking at their data. And when we loan to a small business in those neighborhoods, the average sales go up by 22% versus a control group of 1% to 2%. So we're basically able to provide a lifeblood of infusion for people to expand their businesses in these banking deserts. Typically, they're disproportionately given to minority-owned businesses, women-owned businesses. And so it's a way of using data and information and technology. We can do it instantaneous approval in a way that you might not traditionally be able to do it. And it's making an incredibly large difference in those neighborhoods that most need this kind of financial services.
So those are businesses. Let's talk about individuals. You have a popular tool in the U.S. called Venmo that you acquired when you bought a company called Braintree. And here in Europe, I believe you acquired a company called iZettle.
Yeah.
I know a lot of young people who use that as their primary kind of financial tool. Do you see those services as a tool for inclusiveness?
I do, but I think they're just at the very beginning of their ability to facilitate financial health and inclusion. I'm trying to move away from inclusion in general, because I think financial inclusion, the definition is, do you have a bank account? And I don't think that really helps necessarily in financial health. Like in India, who's done a great job, by the way, in general, in terms of digitizing and providing a more inclusive environment. But something like half the bank accounts that have opened that have never been used. So to me, the real measure is financial health. Like, are people saving more? Can they get access to money when they need it? There are studies that have been done that most lower income families, it isn't that their expenses are greater than their revenues, it's that their cash flow is uneven. And so they come into an emergency, or they're working 2 jobs and one of them goes away, and so they have more expenses than revenue. What we need to figure out is, how do we use data and information to be able to extend responsibly loans to those who can pay that back, provide services like international remittances. International remittances is a great example. We can provide an international remittance at 60% less cost than a traditional international remittance player. Why? We do it wallet to wallet. We go around any of the middlemen, any of the correspondent banking types of relationships, and just be able to give more money to those who really need it when it's sent to them. And so there are numerous different ways that you can start to promote financial health, but I think we're just at the beginning.
Well, you mentioned India, and I remember a couple of years ago a short-lived and kind of disastrous effort to eliminate cash from their economy. And it reminds me of some efforts, from some big retailers today to move to, cashierless stores or cashless stores. And I just wonder if the tech industry, in trying to solve the problems of convenience, ends up potentially sometimes exacerbating the problem of financial inclusion.
Well, I think in India, it was a bit of a rocky transition as they eliminated the higher denomination notes and went digital. But if you look at India, I wouldn't take that as sort of the takeaway from that. Now, and that government was pretty audacious, pretty bold experiment that they're doing, which, they went from Aadhaar, which is their, digital identification, authentication, right up the stack, the software stack, to UPI, they're kind of the way that money is transferred back and forth. And now the government will directly send to beneficiaries their benefits. And you can't get those benefits unless you're part of that system, and they directly pay it from the government right into the bank account of that recipient. And they've done also lower income bank accounts so people don't have to pay fees, et cetera. What that did is it took the leakage out of the system. There was almost 30% leakage when the Indian government would pay benefits to somebody from the time the government issued that to the recipient received it. And that's basically now almost flowing straight through. So there are a ton of benefits that happen from digitization. I think what we have to be cognizant of is that there isn't a single solution for the consumer or lower income or the millennial generation. This is a segment by segment solution that has to be developed. The reason we have 2 brands, a Venmo and a PayPal, is because we have 2 very distinct, specific value propositions that are tailored to those demographics. Like, the typical PayPal customer does not necessarily want to share their payment information and be like, I have like 2 friends. My daughter has 1,000 apparently. She will share everything. I will share nothing. And it's just 2 different ways of designing value propositions. I do think Venmo, working actually, and this is a big part of PayPal's proposition now, is working hand in hand with FIs, with financial institutions, can take the best of what an FI can do, the best of what we can do, bring them together and provide a value proposition that neither of us could do alone. And I think the age that we're entering into, which is the age of platforms, the age of consumable, digestible services, is going to make for very interesting bedfellows as you look ahead, because I think that, everybody thinks about who owns the customer. Nobody owns that customer. The customer owns themselves. They're the ones who are in charge. And they should be able to consume whatever services they want from a plethora of providers in a way that's packaged the right way for them. And I think this idea of who owns the consumer and what the economics are, we have to fundamentally rethink those in an age where we're going to be putting platforms together and providing value propositions that don't come just from a PayPal or from an FI or from another app provider, but are a combination.
By the way, whenever I make a Venmo transaction, I always identify it as private.
Yeah.
I guess I'm self-identifying them as an older,
You're
part
one
of the
of
older demographic.
5%.
Is Venmo a profitable part of your business now? Because it's really mostly kind of identified with people sending money to friends and family.
No.
How do you get it there?
Lots of ways. At first it started off as a P2P, social payments experience, and it's free. So when it's free and there's cost to do it, you're not making any money on that. But what we started to do was introduce additional services. Analysts think about us as monetizing it. There isn't a single Venmo customer who uses a monetizable service who thinks that they're monetizing. What they think is that they're getting increased value for PayPal. So now you can use Venmo to shop at merchants, not just do peer-to-peer. Every time they shop at a merchant, we get a transaction fee from a merchant for doing that. We now have a debit card associated with Venmo. Every time that debit card is used, we get monetizable services from that. But for a Venmo user, it's just a seamless way to use Venmo, both online, mobile, and in-store. And so that's how we're doing that. And we basically said at the end of last year, we had $200 million run rate of revenues at Venmo. At the end of the first quarter, we had a $300 million revenue run rate. So that revenue run rate is exploding right now, but it's only because we're adding additional services that are valued by that Venmo base.
And I believe we've got the PayPal stock price going back to 2015 and basically to the eBay spin-out obviously unlocked a lot of opportunity for you. Like what did that, how much freedom and flexibility did that give you being separated from eBay?
I don't think we realized just how much value was locked when we were inside of eBay and just how difficult it was for other retailers to actively partner with PayPal when they saw eBay as either a direct competitor or a potential competitor. But the other thing that it unlocked for us is the ability to do our own investments, to do our own acquisitions, to think about our own strategy, to become truly a platform company, to challenge our own business model. Like the most momentous thing that we did at PayPal by far and away is we redefined our business model. Instead of steering a consumer to a low-cost funding mechanism that was helpful for our financials, we basically said, we're going to give a consumer total, complete optionality and choice. Just like when you open your physical wallet, you pick whatever item you want to pay. You want to pay with cash, you want to pay with a debit card, a credit card, rewards card. We show every single option to a consumer and they pick and choose on every transaction. What that did, first of all, is it basically unleashed growth for us because consumers were no longer confused. Our churn rate dropped dramatically. Calls into our customer service center dropped dramatically. Our net new actives shot up. We added 40 million net new actives last year. 40 million, that's 2.5 times the amount of net new actives we added 2.5 years ago. And so those kinds of things, which were fundamental strategic changes. I mean, the day we announced that our stock, despite that chart there, dropped 10%. That was a tough day. But, it was a board who understood payments, who understood what we were trying to go do, and wasn't depending on PayPal for profitability of boosting up other pieces of the business. And so I think it was a tremendous opportunity for us to differentiate ourselves and My mom calls Carl Icahn every other day to thank him for agitating for
Uncle
that.
Carl.
So, yeah.
So Dan, we don't have a lot of time, so roll with me quickly through a couple of topic areas.
Okay, I'm ready.
So your predecessor as president of PayPal, David Marcus, is starting a blockchain product at Facebook. How disruptive can Facebook be, do you think, in the global payments arena?
Yeah. We do a tremendous amount with Facebook right now. For many of their initiatives, whether it be Facebook Marketplace, Instagram Shopping, payments on Messenger, we're the underlying platform for all of those. And I think Libra, which is the code name for that Facebook project, I think has the potential to be very interesting in helping to democratize access. I think if you think about stable coins, which Libra apparently will be based on things that we've all seen in the press, you think about blockchain, and you think about certain economies where currencies bounce quite a bit, could be quite powerful.
You see it as a competitive offering to PayPal services?
Well, I see this complementary, and I see the potential for PayPal and Facebook and others to work pretty closely on thinking about currencies and different technologies to open up access to the digital economy.
Okay, I want to hit a few more quickly. So we have a great audience question. What was the reason behind the investment in Uber? I think it was $500 million at the IPO. And will you do more of these types of investments?
So the answer is yes, we would do more. We invested $750 million into Mercado Libre. Mercado Libre, I think, is one of the leading e-commerce players in LATAM, and Mercado Pago is one of the leading payment networks. And you take their, 250 million consumers are 277 million consumers, and basically through that investment combine our two networks together to basically enable Mercado Pago and PayPal customers to seamlessly interact with each other and shop on the different merchant locations that we have. We'll do investments like that all day to bring scale and network economies together. We think the investment in Uber was very similar. Uber.
Right now, I think you're a little below water on that one.
That's okay. We didn't invest it because we think that, we didn't invest it we're not investment bankers. We're investors in relationships and what our network is. And
so you think you could get like a privileged position in the payment stack for
we think the
customers?
Commercial relationship that we established and the investment was a part of that was something I would do all day long.
Okay, so another quick one. You recently kicked off a right-wing American commentator off your network. You got sued for it. At the same time, you expressed disapproval with the U.S. states that are passing anti-abortion legislation, been criticized for that too. As a CEO of an American company, how do you navigate this very intense political environment right now?
Yeah. Well, it's not easy. I'd say there are probably three things that I think about here. First of all, it's impossible to avoid the cultural wars. If you're a big consumer brand, you cannot sidestep the cultural wars that are going on. Number two, I think companies have an obligation now to basically do reverse Friedmanism, right? So Milton Friedman, the dean of market capitalism, famously said, like, if the Sahara Desert, the government was in charge of the Sahara Desert, in 4 years there'd be a shortage of sand. So he said that corporations should maximize shareholder value. That's their sole purpose. I don't believe in that. I actually believe that companies have an obligation to address the issues of our day. The values we have as a company are paramount in guiding us in terms of these everyday decisions. So when we stand up for these things, and we withdrew from North Carolina when they passed a bill against sexual discrimination for identity or orientation, We were tremendously criticized by many for that. And many people said we were entering into the political arena doing that. That is not true at all. Like, for me, this is values-based decisions, not political decisions. As I said in the US, this was not a red issue or a blue issue. It was a red, white, and blue issue. There should be no room for discrimination against anyone in the US. That's part of the values of the country. Those are part of values of many of us throughout the world. And I think we have an obligation to stand up for those values. And I would, despite all the death threats that I got as a result of it, I told my mom about those death threats. Bad idea, by the way, in general. And she was like, oh my, would you do that again? And I was like, every single time, Mom, because those are the values you instilled in me. And those are the values that we believe in at PayPal, and it allows us to attract the very best talent to work at PayPal because they're inspired by what we're trying to go do. And
we're out of time, but I got one more, so maybe give me a really short answer. A while ago, when you were the head of Virgin Mobile, you spent a day as a homeless person on the streets of New York. What one lesson did you take from that you apply at PayPal?
That you cannot serve a segment of the market just intellectually. You have to experience and you need to feel it in your heart and in your mind. And if you can do that, and we have this at PayPal, we require that everybody spend a day in the life of somebody who's underserved. We actually have a quiz, we have a thing that everyone has to go through so that you see how difficult it is to live in somebody's shoes who doesn't have the same access that we do. And then you feel it emotionally, you become passionate about it, you intellectually understand it, but you'll go through walls to solve it.
Okay, Dan Schulman of PayPal, thank you for joining us.
Thank you.